Hello, investors. It is Connor Bates here, Associate Portfolio Manager with Revere Asset Management. Today is Friday, June 14th, 5:47 p.m. Eastern Time, coming to you from Fort Lauderdale, Florida, with tonight's Revere Roundup Daily Market Insight video. So we'll go into the trend gauge first. Market leaders overall in a bullish uptrend. Today, they took a little bit of a pause, and some of the leaders are short-term extended, but green arrow still on that one. Short-term, this is our 21-day exponential moving average. We have the green arrow for the S&P 500 and the NASDAQ, and then Dow, mid-caps, and the Russell all trading below their short-term 21-day exponential moving average. Medium-term, we have the green arrow, and then the Dow, mid-caps, small caps, all showing relative weakness and trading below. And then we have the long-term 200-day moving average, green arrow for everything. And as we know, nothing bad happens above. The market doesn't get into serious danger until we break the 200-day moving average. So what happened today? Well, tech was very strong. Breadth still remains very weak, and you'll see that in the numbers as I get to them later. And leaders, mixed bag. A lot of the tech leaders had a strong day, but some other, retail, apparel leaders resting and getting a well-deserved pullback. So here are the final numbers. 21 over 21 list was down 1.15%. 7 of them were green on the day and 14 of them were red. The Big 8 was up 0.26%. RG8, our growth 8 growth composite, was down 1.23%. S&P 500 was down 0.04%. And RSP, which is the S&P 500 equal weight, was down 0.61%. And that continues to display the lack of breadth in this market. QQQ was up 0.52%, and the equal weight was up 0.06%. Dow Jones, another red day, down 0.15%. Mid-caps, minus 1.36%. Russell 2000 was the big loser of the day, down 1.61%. And then global diversified 60/40 was roughly flat, down 0.03%. And in-house GROTECTION was down 0.43%. So let's get into our inter-asset correlation. Yeah, so first chart, S&P 500. Nothing to complain about. We're getting a little bit extended here short term. We are about 4.5% above the 50-day moving average, but the trend is great. I'll pull a 60-minute chart here. And as you can see, we continue to hold this 5,400 level, and that's around the low of that gap up on that news. So that's a clear line in the sand that we're watching right now, and we'd like to see that level hold. Moving on to the QQQ, continues to be one of the stronger indexes right now, and it notched another all-time high close. Can't ask for more in that. The Dow Jones, tons of relative weakness. Look at this RS line. You can see just that tells you the story right there. And it's getting rejected at a downward sloping 21 and 50-day moving average. Mid caps, this is the story with the weak breadth, breaking down out of this support zone, and the relative strength line has shown major weakness. Russell 2000 was down 1.61%. This was the big loser. And I'm going to pull up a weekly chart, and it still has not broken out of this stage 1 base. Every time it's tried, it's rejected. And you could argue we're forming a mini 10 shoulders right here. So we continue to watch this index, but it has just underperformed massively until it starts to turn around. The VIX popped up 6% today, but overall still near these lows. And this is what we like to see with a low VIX reading. We get that better, smooth, lower volatility uptrend in the indexes. The dollar, this is not great for the markets. It just kind of broke out from this downtrend line recently. and it reclaimed all the moving averages. And this is something we'll continue to track because any more strength on this could be negative for equities. Gold bounced a little bit today, but still into that declining 50-day moving average. Gold stocks, sitting on the support zone right now. These commodities have had a big move, so makes sense to see them consolidate a little bit. But one notable thing is they were up with a strong dollar today, so that correlation is constantly changing. Silver, this looks the best out of the commodities, really. It put in a hammer here off the 50-day moving average and would like to see it get back through this 27-24 pivot to confirm the reversal. Bitcoin was looking good here in the space for a while, but showed some weakness today, cracking the 50-day moving average in this little support shell. When we zoom out the weekly, still super constructive overall, just may need a few more weeks to digest. Broad bonds, very strong, back above all the moving averages and was up 0.15% today. TLT, again, very strong. And you can see all these moving averages are getting very clumped together. And, potentially this wants a change in trend here, which we've been seeing. TYX, 30-year Treasury bond breaking down again. And then TNX, the 10-year, continues to move lower. And what's interesting is TLT may be becoming the safety trade. Usually small caps get good relief when the 10-year is weak, but we have not seen that lately. And this is part of the reason why we do this inter-asset correlation every night. They're constantly changing, so it requires us to be on top of it. So that wraps it for inter-asset correlation. Let's head to the tail of the tape. So if you guys want to pause this and look at it, I'll just go over some brief things. Sentiment wise, VIX notable up today. Fear and greed back to 38, down 5. That's notable. That's went from extreme greed to fear pretty quick. And then the NAM exposure that ticked up to 86. So that was a pretty big jump. Sectors. So we had software pretty strong today, IGV. Adobe had a strong gap up on earnings. Silver was one of the leading sectors today. It had that bullish reversal off the 50-day moving average. And then XLC, XLK were both strong as well, and tech's been carrying this market. Some weak sectors, TAN, solars, getting a well-deserved rest, really. First Solar and all those names pulled back today, and this sector has been very strong. Banks red again today. We're seeing further weakness in other banks such as JP Morgan, Goldman Sachs. Home builders, ITB, still can't rally and showing relative weakness. And then transports, retail, and bios all weak. So portfolio changes. We added a hedge in stocks today. Semiconductors are getting a little stretched here, and this can help us hold on to our leaders as we do own NVIDIA. We trimmed some SSO. We're getting 4 or 5% above the 50-day moving average. Never hurts to lock in some profits. And then trimmed IBIT on that reversal off the 50-day. And First Solar failing out of that flag pattern, but still own some First Solar. And so the bottom line, the NASDAQ continues to dominate. Breadth continues to be weak. And leaders overall are staying pretty strong. All right, I'll pull up MarketSmith and take a look at the 21 over 21 list. So top gainers from the day from the 21 over 21 list. App, this one's going to be kicked off as it broke it, but it's trying to rally back into that 50-day moving average. Spotify. So this is a name that it likes to bounce off the 50-day, and it's more friendly buying weakness than strength. It had that cost cutting or that price hike news here, and it looked like it was going to break out of the space, but came back in, found support at the 50-day moving average, and was up 2.29% today. NVIDIA, the true market leader, continues to move higher, riding the AEMA. And yeah, a lot of people are saying they thought it was going to run into the split and top, but when a lot of market participants think something, it usually doesn't happen. SARC, this brought back above those moving averages, and I'll just pull up ARC. It's better. And yeah, with breadth being bad and Kathy Wood's ARC portfolio has quite some lagging stocks, and this looks like it wants to roll lower. And then Coherent, another strong one. It had that CEO news the other day, and it's breaking out through that 70 level. We'll look at CrowdStrike as well, which is the biggest holding in GROTECTION right now. Continues to ride higher after that gap. And really what we're watching is don't want to see it go below that gap day low, clear level to trade against. Pinterest, gap down overnight on news that someone was selling a lot of shares, got bought off at the 21-day moving average and closed really well. So we'll take a look at some of the losers. First Solar, losing the 8-day today. Looks like that 21-day could be support, but given the magnitude of this move, it deserves a rest and maybe it builds out a base. But bigger picture, I mean, fantastic earnings and lots of with the data centers and the need for solar power. This name is acting well. HWM, aerospace and defense stocks got hit today, and this was breaking the 21. ELF, retail, consumer related stocks were also weak, but this just looks like it's forming a handle. Kava, down 2.8% on the day, but looks like it could be forming another base. And then ANF, another one, after that huge earnings gap, still looks overall constructive. And I'll show that Adobe. It's been downtrending. The expectations were pretty low going into it. And then it's into the 200-day moving average. So we'll see how this one shapes out. And that's going to wrap it for charts today. So if you'd like to hear from me, my email is Connor@Revere Asset, and then you can reach out to Dan or Don at revereasset.com. Phone is 855-REAL-WEALTH, 855-732-5932. And we name our flagship portfolio GROTECTION for a reason. We want to participate when the market is in an uptrend, and we want to protect our money in downtrends. The market's in an uptrend right now, and leaders are acting fine, but we're always on the lookout if there's a potential reversal change, and we're always being proactive with that. And if you're interested in becoming a client, please reach out. And with that, I'll wrap it up for Friday, June 14th. This is Connor Bates with Revere Asset Management, telling it like it is. Thanks for listening and have a great weekend.